Alright, so this candlestick here, the reason why it has faded out, you see, we told you that this is a reversal candlestick, and it has opened the next one and it has continued, and it was because of the news. So this reversal candlestick, because it is inside the previous candlesticks and it's completed inside of them, it's not very reliable. It's almost unreliable. And after that, we've had a news published, so it has gone up. But after that, you should have sold, and it was a very good sell signal. So I haven't entered the market on a good point. Is that correct? Yes, you haven't identified your candlestick correctly. The reversal candlestick is reliable when it is completely higher than its two sides. For example, this one is exactly higher than its two sides. The shadow is up there. But this one here is inside the trend. It's not very higher than its two sides. Is that clear? Yes, completely. Okay. Okay, so what is your next question? On AUD USD chart. AUD USD on the 4-hour time frame. You see, in this, you have a candlestick with a long shadow. So there is a possibility of a fade out because it's not higher than its two sides. It is completed inside the previous candlestick. So there is a possibility of decline. So when I screenshotted this, the new candlestick hadn't been formed yet. But yeah, it has given you the descending signal here. It was going up, but it was white, and it was descending, and I think it's on the trend line. Do I have access? Yes, you do. So this is my trend line, and the price is right here. So this is unreliable. Yes, that is unreliable. You shouldn't do anything now because it is completed inside the previous candles. Can we please move on to the pound CHF chart? This is the pound CHF. What time frame? And the 4-hour time frame. And also the daily time frame. So this was the first chart we talked about. Because the neck here has been opened, and there's a possibility that even if this candle is completed, you don't have an ascending signal and you're going to have a decline because the trend line here has been broken as well. There's a large possibility that the trend line has been broken too. So no, it hasn't broken it yet. But there's a possibility that it will reach this wall here and then it will retrace. But it's suspicious because the neck here has been open. But it's not really reliable because it's white, right? What is white? The candlestick. And the daily time frame? Yes. We can't really say that based on this because in here we have a white candlestick, but it has happened. You see, in the white ones it happens too, but it's just a little bit less reliable. The main reason is that it has opened the neck here. So it shouldn't have been opened here if it was going to go up. And when this is open, it means that we're going to have a decline in the future. You see, you should pay a lot of attention to your candlesticks because sometimes the candlestick is completed next to another one and it's very sensitive. But this chart is suspicious because in the daily chart it is higher than the weekly chart. You see, I told you to work on the main currency pairs because they are a lot more technical. If you work on these currency pairs that are not really popular and the minor currency pairs, you're going they have many errors because they are not very technical. And now that I'm looking at this chart, the only thing, the only method that has worked well in this chart is the candlesticks method and the pivots. But based on other strategies, it's not very easy to analyze. If this neck hadn't been open here, you could say that it was ascending. But because it has been opened, it means that we're going to have a decline, and it's the end of an ascending trend, so it has to go down. But maybe based on this candlestick, you're going to have a small uptrend. What is your next question? We have another candlestick on the V-shaped part there. Please show me. You have access. Show me on the chart. I can't really find it. What do you want to find on what chart? I just want to know if this is another type of candlesticks because I have read it in the book. And I remember that I sent you this candlestick. What chart was it? It was just a picture. And the candlestick was for knowing when uptrend or downtrend starts. Please send it right here so I can see it on WhatsApp. Excuse me, can I? Oh, I can send it here. No, I don't have it right here. Please send it on this app. Oh, I should open the Zoom app. And what about Telegram? Can you send it on Telegram? Yes, I can send it on Telegram. Okay, so please send me the photo on there. I sent it to you. I didn't receive it. Did you send it on Telegram? Yes, on the group. Oh, I see it. This is the list of the candlesticks. The second one here, yes, this one. Do you agree with this? Do we have this type of candlesticks? When we have this candlesticks at the end of the trend, inside the V shape, but the shadow is on the upper side, not the lower side. Is it a sign for An uptrend? This is called the inverted hammer. But it depends on the location, on its location on the market. Sometimes we don't have an uptrend, we have a downtrend. But please don't read the book because it will confuse you. It just teaches you the default situation of everything. Okay, I will. You see, for example, this candlestick has errors because these two candlesticks are very similar. When the two similar candlesticks are next to each other, it is counted as one. What does that mean? You see, when two candlesticks are similar and they're next to each other, it is counted as one. So is it a continuation candlestick or a reversal? No, it is going to send the price up. So if it's white it goes up and if it's black it goes down, right? Yes, exactly. And these are just the default situation of everything. So the first one here, is it the same one that you say? Yes, the shooting star. But this is something else. Yeah, that's different. Or for example, this one. No, these are different. It just depends on its location on the market. But this that is written in the book, for example, this if this is formed here, it's going to have a decline. But in my experience, it usually goes up because it's just a default situation. But in the real market, it's going to actually send it upward. But for example, in this shape, in this photo, it's just a default situation of everything. But in the real market, everything is different. But you're going to learn about this when you learn the candlesticks better. Sometimes it is completed as a doji candlestick. Can you analyze the doji candlesticks the same or is its analysis different? It just, all of it depends on its location on the market. So the doji candlestick doesn't have any body, right? Yes, and it depends on its previous candlestick. If the previous candlestick is completed as an ascending candlestick, and then we have a doji, it's going to send the price upward. But if it's vice versa, there's a possibility of fading out and you're going to have a decline. Mr. Sadari is not here. Yeah, I don't know why. Is the class being recorded? Yes, it is. So you see, this candlestick is depends on its location. You see, for example, in here, it's true that this candlestick, for example, is completed like this on the daily time frame. Hypothetically, it's completed like this. So if that happens, this is a swing higher shooting star candlestick. But the disadvantage is that it has opened the neck here. Please stop moving your pointer. All right. You see the neck here shouldn't have been opened. The price shouldn't have gone further than this area. When it does, it is telling me that I have a Fibonacci there. I have a overall Fibonacci right here. and the price has started to reverse on 23 level. So if it wants to go up, there's a possibility that it's going to reach here on 11 level Fibonacci, or at this line here, and after that it's going to decline again. So you shouldn't start trading only based on the shape of this candlestick. The location is very important. If the candlestick had declined and it has been completed here, you could have said that it was ascending, like this one, because these two are the same, they're very similar. But the location is very important, because you've had a neck here, it makes it unreliable and it causes a decline. Or for example, another example is, for example, in here, please take a look at this candlestick. It has a very good candlestick. It was inside the trend, and we've had an uptrend here. Exactly. Exactly. So it was going to cause an uptrend. Yes, and it has. The price has gone up. I think Mr. Sadavi has a problem. So this by itself is an ascending signal for us, and it causes an upward movement. But how do we know for how long it's going to continue its movement? Because I'm very busy and I work on weekly time frames. Couldn't I consider the previous candlestick for prediction? For example, in the chart that I don't remember what it was. Can you put? Oh, it was this chart on the USDCHN. CNH in the weekly time frame. Can you please give me access? You have access now. In here. Can you see the green line? Okay, so in the weekly time frame, I know that you have talked about this before, that this candlestick is inside the trend and you have located it before, but my question is that if I bought here, can I say that it's going to come up to here, at least up until the body of the previous candlestick? Why do you say that? What is your reason for that? I think it's going to come up to here. Okay, so what is your reason? Why do you say that? Why there? Based on what are you saying this? Because it's going to come up as much as one candlestick. No, you see, in here you've had pivots right here where you have put your take profit. You have one pivot here, and the next one is almost here on the green line that you have put there. But on the way you have a pivot, so you should exit, and after that you should enter again. Okay, I got it. Thank you. You see, if you consider the final take profit, that will cause a little bit of upward movement, but then it will decline and then you'll lose money. That's correct. So can you see on the way this candlestick is an ascending candlestick here. It gives us an ascending signal, but it's not very reliable because it's empty. and it's not white. And also we've had an uptrend, and also it has opened the pivots that were right here. Okay, yes. Can you see it here? It has opened the pivots. When the pivots are opened from the top, that it means that it's going to go up. But if this hadn't happened, yes, you could have sold. But because this has happened, it has caused an upward movement. Is that clear? Yes, thank you. So you learned about the swing high candlestick. Yes. So let's move on to the reversal candlestick. So the swing high and reversal candlestick are the same in their process, but they have one difference. Let me move on a better chart. Okay, for example, this one. The reversal candlestick has shadows on both sides, and the upper shadow should be a little bit longer than the lower shadow. Sometimes the shadows are the same height, but it still has given us the signal. But when we can say that this reversal candlestick is reliable, where this candlestick has two shadows that are longer than the body, and the upper shadow has to be even a little bit longer than the lower shadow. And this candlestick itself is higher than the ones that are on the two sides of it. And based on its name, it's going to cause a reversal. So it's more powerful than the swing high candlestick. The reversal candlestick is going to change your trend completely. For example, in here, we have a swing high candlestick, and we've had just a little bit of an upward movement. But in reversal candlesticks, we're going to have a complete change of the trend. For example, in here, I have a reversal here. This is a swing high candlestick. It has two long shadows, and the lower shadow is longer than the upper shadow, and it has caused an upward movement. Does it matter if it's white or black? No, it does matter. These are the factors that gives you reliability. It's the same as the swing high candlestick. For example, another example. Excuse me, do I have access? You have now. You have access. So is this a reversal candlestick? No, it's not. This is the shadows. The shadow here is shorter than the body. It's going to give you an ascending signal, but it's not very reliable. So the body should be shorter than the shadows, right? Yes, but in here the body is longer than the shadows. And the next candlestick has given you the confirmation, and the next candle was the candlestick that has caused an upward movement. It couldn't do that on its own. You see, for example, in here, this shadow is smaller than the body. I can't see it. Can you please show it again? In here, can you see it? Yes, I can. For example, in here, this shadow is smaller and shorter than the body. And the next candlestick, please stop moving the pointer. Okay, let me take away your access. You see in here, the next candle that is formed here, it has given us a confirmation. And this is the one that has given the previous one a reliability. The candlestick couldn't give us a clear signal on its own. So you should start checking all of the factors. When a candlestick is completed like this, you should try not to trade and wait for the next candlestick to give you the signal and the confirmation. And another example, you see we have a swing high here, we have another one here. It has caused an upward movement. But the reversal candlestick, let me find a reversal candlestick. Let me look for it too. A reversal candlestick. Can we please move on to the pound dollar? I have find one. This is the reversal candlestick, and it has given us a very good descending signal. Oh yes, I can see it. And another one here, can you see it? The shadows are longer than the body, and it has caused an upward movement. And in here we've had a reversal. Why wasn't this performed? Because the pivot here has been opened. You should keep all of these in mind. You should pay attention to the location of your candlestick. If it's completed in a pivot or in a breakout, what is the candlestick next to it? How does it look like? Is it reliable or not? For example, in here I have a reversal candlestick. In here, I have a reversal candlestick, but it has two errors. The lower shadow is longer than the upper shadow. It's just a little bit, 1 millimeter longer than the upper one. And the second one is that it has opened the pivot, so it makes it unreliable. What pivot has it opened? The one that we have in here. You see the red line here. It has opened this. And we've had a stop here before. It has opened this area, this pivot here. And it has caused an upward movement. Is that clear? Can you hear me? Miss Sharifi. Miss Sharifi, I can't hear you. Miss Sharifi. Hi. Sorry, you got disconnected for a second. No, I could hear you. You couldn't hear me. Okay. So do I have access? I have put a circle around it here. Oh, this is a reversal candlestick, this one. Please don't move the chart. You mean this? Yes, this is a reversal candlestick. And it's very reliable too. Because the upper shadow is longer than the lower shadow. And it has been completed in a pivot. You see the pivot is here. So it has been completed in a pivot. And that makes it very reliable. And you see that we've had a decline. You see, you have another one here. Is this reversal candlestick too? This. Can you see it? This one. Yes. Let me delete it for a second. Please delete it. Yes, this is another reversal candlestick. The shadows are almost at the same height, but it has been completed in a swing low pivot. And makes it reliable, and it has caused a decline. But it hasn't been performed. No, it has. And it has caused the decline too. Yeah, you're right. It has caused a downward movement here. If it's formed at the top, it makes a decline. You see, you should consider two things. The upper shadow should be longer. The body of the candlestick should be white if it's completed in an uptrend. And the third one, and the most important one, is that it has to be completed in a pivot. If it can open the pivot there, it will be faded out. So it has to be completed in a pivot. So in a day, you usually have two of these candlesticks. You either have a swing high candlestick or a reversal candlestick. So at least two every day. So you can get the signal in a 4-hour time frame easily. So excuse me, is this a reversal candlestick? No, this is inside the trend, and it's also inside the previous candlesticks. Yeah, it's a little bit longer. You mean this? No. You see, it's inside the trend. It's completed in the trend. But it should be at the top of the reverse V shape or at the bottom of the V shape. You see that on the swing high or a swing low. But this one is inside your trend. So it's not at the top or bottom of the trend. What about the one next to it? Yes, they're all the same because they are all completed inside each other. You see, it should be higher than its two sides. There should be nothing on the right side and the left side of it. I got it. For example, let me move on to another chart. This one is too. No. No, that is a reversal candlestick. And it has caused a decline. Let me try this one. You see, you've had a decline here. You've had a swing high candlestick here. You see, this is a swing high candlestick. For example, this one is also a swing high candlestick as well, because the decline was very little and it was inside the trend. Another example is, for example, in here, this one. It's inside the trend and it's formed there, but the shadow here has been so long that the two sides of it are empty, and it has caused an upward movement. Or in here, it's a swing high candlestick, and it has caused a small downward upward movement. And unless this shadow here is opened, it is reliable. For example, in here, you have an ascending signal, but it has retraced when it reached the pivot. The pivot is here. You have the pivots right here. And the signal after that was descending, right? Yes. And here you have a doji swing high. You see, it has no body. We used to call it the gravestone. Yes, but it's called the doji candlestick. And the location is very important. The shadow is longer than the two sides of it. And this neck here has been opened as well. You see, the neck is right here on the red line. The neck here was there. When that was opened, the decline has started. So if we want to sell, we should start selling below the red line that you put there. Yes, exactly. And you should put your take profit above the shadow. And this is a daily time frame too. That's why the distance is too much. Another example is here. You see, the upper shadow is shorter than the lower shadow, and it's not very reliable, but it has been performed. The reason is pivots. You see the pivots here with the red line? It has gone further than the pivot. You see, we definitely had a pivot in the past. You see a very powerful pivot in here. The one that I showed you. That was the powerful pivot that started the performance of the candlestick. I lost it. Where was it? Oh, it was right here. You see, the upper shadow is not longer than the lower shadow, but the candlestick is reliable because it is completed inside a pivot. But it was a little bit difficult to identify. And you see, the factors are not very well performed, but it has caused an upward movement. If this was a good signal, it should have the cross there should have been higher, and yes, that would have made it easier to identify. I found something here. This one, the green circle. Yes, exactly. That has caused a downward movement. And it's called the hanging man in the book. But sometimes it has faded out. For example, maybe because it wasn't completed in a pivot, or maybe it was inside the trend. But in here, you see the body is higher than the sides of it. That is why it has been performed. Excuse me, can I highlight another one? You see, this is a reversal candlestick, but because it is inside the trend, it's unreliable, right? Yes, exactly, that's correct. Or another example, for example, look at this. And the euro dollar. This is a descending signal candlestick. And if the shadow was higher and longer than the body, you had a more visible decline. But in here, you see, because that hasn't happened, you have fluctuations here and it's stuck here. Or for example, in here, you have a doji here, and the shadow is completed higher than the two sides of it, so it has been performed. You see that? In here, we have another one. The The upper shadow is longer and it's formed in a swing high, so it has caused a decline. You see, I have a question. The the green line here that I have highlighted, I have a question about it. From the bottom, it has opened the V shape. When we were going to trade, weren't we going to doubt this? Okay, I'm going to give you access, and please explain to me on the chart. Click on the screen. Can you see my pointer? Okay, now I can see it. Okay, so I want to use a line. It's up there. So you see, it shouldn't have had gone further than this. You see, this is our V shape, but it has gone further than the V shape. No, it hasn't. You see, this wasn't the end of your V shape. The first leg of your V shape was completed when the doji was formed. You see, when we have a V shape, and when the second leg of it is going to be formed, you definitely have a swing high or swing low there. You see, the price has declined here and we've had a swing low here. So this is the tip of your V shape. When you have a V shape, you definitely have the tip of it. You see, this is your reverse V shape, and that is your swing low. Excuse me, I can see it. I'm talking about this area. Can you see it? No, I can't see your pointer. Oh, that's because you have the access. Let me take away your access. I'm talking about this area. Can you see it? Yes, I can't see it. So this area that I just highlighted it is your swing high here. And after that, the second leg of your reverse V shape has started to form. So you definitely, when you have a reverse V shape or a V shape, you have a swing high. You see, you have a V shape here and reverse V shapes. All of these have swing highs. When the second leg is going to be formed, we're definitely going to have a swing high. So this is a very important point. Whenever you see a reversal, or at the end you see end of a tide, you should know that your trend is final and it's going to reverse, and you have a Fibonacci. Whenever you see a candlestick with a long shadow on this at the swing high, you can make sure that you have a Fibonacci and you can draw it. Thank you so much. Is that clear? Yes. So whenever you see a candlestick with a long shadow, even before the next candle is completed, you will know that you have a Fibonacci in that chart. For example, in here, I've had this tight here and it has happened. So I know I have a Fibonacci in this chart. And I know that I have to start buying here and gain my profits based on the pivots. Or for example, in here, we can draw the Fibonacci here. So is that clear? Or for example, in here we have a swing high or a swing low at the bottom. So we can quickly draw the Fibonacci, and you see that you have a reversal on 78 level. So whenever you see a candlestick with a long shadow, whether it's a reversal or swing high candlestick, know that you have a Fibonacci in that chart, and you can get the signals from that. So did you get the reversal candlestick completely? Yes, I did. Thank you. The difference between the reversal and the swing high, what is the difference between them? One of the differences is that the reversal candlestick changes the trend completely. Yes, and it's more reliable and more powerful. And it's sometimes performed in short-term trading. Is that clear? Yes. So did you understand about the factors? Yes. Excuse me, is this a reversal candlestick? Yes, it is a reversal candlestick, but it's unreliable because it's inside the trend. No, because it has gone further than the pivot. It shouldn't have gone further than the pivot. It's a very important point. Reversal candlestick or swing high candlestick is reliable when it's completed inside the pivot. If it goes further than the pivot and then it's completed, it's unreliable. So this is one of the factors of our candlesticks. So you see that here it has opened the pivot here, all of the pivots that we have here. That is why we've had an upward movement. And its upper shadow is longer than the lower shadow. Yes, it was, but it has faded out because it didn't have the other factors. So you should keep that in mind. And you shouldn't just look at the candlestick and the shape of the candlesticks. You should check all of the factors to see if it's reliable or not. Let me move on to another chart. Excuse me, now that you are sick, it's okay. Whenever you want to, you can finish the class. No, that's okay. I'm fine. You see, in here, thank you for saying that, but I have to finish the class here. So we have a swing high candlestick here and a reversal candlestick in here. So the difference is in the shadow. The swing high here doesn't have any shadows or very little shadow on one side of it, but in the reversal candlestick we have a little bit of a longer shadow, and they are always completed on the highest or lowest part of the chart. You see, this is completed inside a pivot, and it has given us a signal. And this here has been completed in a swing low pivot, and it has given us a very good descending signal. Is that clear? Yes, thank you. You see, so you have these two candlesticks every day in your hourly time frames or 4-hour time frames. But the shorter the time frame, the less reliable the candlesticks. But you have another one here. Can you see it? So it's going to go up at that point. Why did you say that? Because it's going to open the price. I will tell you now why I said that. You see, in here, we have, firstly, we have an unreliable reversal candlestick because the lower shadow is longer than the upper shadow. And secondly, it has almost opened the pivot here. You see that? And also this one has been opened as well. And the 4-hour candlestick that here has been completed, if it was completed a little bit lower, it would have been an engulfing candlestick. But because it's exactly completed in In the pivot, it's called the continuation candlestick, which I'm going to teach you about next session. And you should start buying in your euro dollar chart here. And this is the signal of this session. Thank you so much. So did you understand that? Yes, I did. Please practice these a lot. I will teach you about continuation and engulfing candlestick next session. And this is a reversal candlestick as well, right? Yes, it is. But please note that it's completed inside the previous candlestick. And it's in a sideways trend. Whenever your reversal or swing high candlestick is in your sideways trend or inside the previous candlestick, or when the shadows are not longer than the two sides of it, know that it's unreliable and don't pay attention to it. Thank you so much. You're welcome. I will send you the recorded version of the class and please practice. And find the swing high and reversal candlesticks in the charts and can get very good signals from them. And you have one on the 2:30 a.m. and you have one on 12:30 and on 4 and 8 and then 12. Every 4 hours, a 4 hour candlestick is completed. So you can take orders based on them. But please check all of the factors that this reversal candlestick that we have here is reliable or not. Thank you so much. It was great. You're welcome. I will send you the video so you can practice. If you have any questions, please ask me. Thank you. I will. So is that clear? Any questions? No, thank you so much. Have a good night. You too. Goodbye.